The XRP ecosystem is entering a new phase, and the numbers are speaking louder than headlines. Right now, 682 million XRP is locked inside institutional ETF vaults. That's not retail hype. That's structured capital. That's strategic positioning. And the race to 1 billion XRP inside ETFs has officially begun. Let's break it down clearly for the Satoshi Guy community. XRP ETF holdings, the institutional accumulation. Here's how the major players stack up in this ETF accumulation race. Canary Capital, 174 million XRP, 21 shares. 120 million XRP. Grayscale, 100 million XRP. Bitwise, 100 million XRP. Franklin Templeton, 92 million XRP. Rex Osprey, 50 million XRP. Bitwise 10 Crypto Index Fund, 28 million XRP. That brings the total to 682 million XRP held inside ETF structures. To put this into perspective, that represents about 0.68% of the total XRP supply. Some may say that's small. But in global finance, 0.68% locked away by institutions is not small. It's a strategic foothold. And here's the key point. ETF vaults are not day trading wallets. These are long-term custody positions. Once assets go in, they're not meant for quick flips. They're positioned for macro cycles. What does ETF lockup really mean? When XRP is held inside ETFs, it becomes part of regulated financial products. That means pension funds can gain exposure, wealth managers can allocate capital, high net worth clients can invest through traditional brokerage accounts. This bridges the gap between crypto native investors and Wall Street capital. If this pace continues and ETFs cross the 1 billion XRP mark, that psychological milestone alone could shift market sentiment dramatically. The XRP rich list, 25 wallets control 20.3 billion XRP. Now here's where things get even more interesting. 25 wallets hold 20.3 billion XRP. That's roughly 37% of the circulating supply. Think about that carefully. A very small group controls more than 1/3 of all available XRP. And most of these holdings are reportedly outside Ripple's escrow system. About Ripple's escrow. Ripple Labs manages a structured escrow mechanism designed to control supply release. However, the wallets dominating the rich list are largely separate from that controlled release schedule. That means these holders are independent power players. Some may be exchanges, some may be institutional custodians, some could be ultra-high net worth individuals. But whoever they are not small retail traders. Are billionaires quietly accumulating? Here's what makes this narrative powerful. ETFs accumulating hundreds of millions, a small cluster of wallets holding 37%, supply locked away in structured vehicles, increasing regulatory clarity around XRP. The billionaires aren't tweeting. They're not making YouTube videos. They're not posting predictions, but blockchain doesn't lie. Their wallets are growing. It's major exchanges stacked for wealthy clients. Large exchanges like Binance and Uphold hold massive XRP reserves. These platforms provide liquidity for institutions, OTC desks, and high-value clients. This suggests infrastructure is already in place for large-scale XRP movement when needed. And remember, wealth moves before headlines. The supply shock potential. Let's combine the data. 682 million XRP locked in ETFs, 20.3 billion XRP held by 25 wallets, significant exchange custody reserves, Ripple escrow controlling remaining structured release. When supply concentrates like this, two scenarios usually follow. Low volatility accumulation phase. Explosive breakout when demand spikes. If new demand hits while supply is tightly held, price pressure builds quickly. This is basic market structure and why institutions might be positioning early. XRP's use case in cross-border payments and liquidity. Provisioning makes it unique in the digital asset space, unlike purely speculative meme tokens. XRP has infrastructure relationships, banking integrations, and a long-standing market presence. Institutions don't allocate capital randomly. They allocate where they see liquidity, regulatory survivability, long-term utility, deep market history. XRP checks many of those boxes. The race to 1 billion XRP in ETFs. We are currently at 682 million. If institutional demand continues, crossing 1 billion XRP locked could create live media momentum, increased institutional FOMO, broader retail reentry, higher scarcity narrative, and narratives move markets. Final thoughts for the Satoshi Guy community. Are the ultra-rich secretly betting on XRP? The data suggests strategic positioning. The wallets suggest concentration. The ETFs suggest confidence. The exchanges suggest readiness. This doesn't guarantee price movement tomorrow, but it signals something deeper. Structured capital is building exposure quietly. The billionaires may not be talking, but their wallets are. If you're watching XRP, don't just watch price candles. Watch supply. Watch custody. Watch ETF vaults. Watch wallet concentration? Because in crypto, smart money moves silently before the crowd notices. If you enjoyed this deep dive, make sure you watch to the end of the next breakdown, and don't forget to subscribe to Satoshi Guide for more high-level crypto analysis. The race to 1 billion XRP has begun.